So today I'm going to show you how we can test the BTST strategy, and basically I'm showing you Nifty data here. It's since 1995. I will give you the link in the description below. You can get the data from there, and you can also directly download it. It's a daily data. It has OHLC for Nifty, and it's still 2023, right? So it's almost 27 28 years of data. And let's see, if we were doing two kinds of strategies. One is intraday, that means we buy at the opening price and we sell it at the closing price. That can be one strategy, that's purely intraday. And the second can be BTST, that means we at the closing price we buy Nifty, and next day morning we sell it. So let's test it out. So first let's test the intraday one. Let's test the intraday one first. So essentially what we are saying is, the rules is we will buy at the open price and we will just sell it at the closing price. So that becomes my rule. So let's test it out. So let's say we have 1 lakh rupees. So we start with 1 lakh rupees. So the number of stocks, or the number of the quantity that we will be able to buy with 1 lakh will be 1 lakh divided by the opening price. So I will be able to buy 100.58 stocks, and as you can see that the number the stocks have gone up, the price has gone up, so I would have made a profit. So the final value of my portfolio will be this multiplied by 1000, and you can see that I made a profit of 583 rupees. And this you can calculate it the other way around also. So if I do the formula, 1000, which is a closing price minus the opening price, divided by the 994.2, is the same 0.583, right? So this is how we are going to test this strategy. So we will assume that we are starting with 1 lakh rupees. We see how many stocks we will be buying at the opening price, and then we will find the closing price. Now for the next day, my opening value is 1 lakh 583 rupees, divide by the opening price. So I will be able to get 100.4 stocks. And again, if I do this, my now value has gone down. It has gone down to 99,316. And as you can see, why? Because the open was higher and the close was low. So since the market went down, so my value has also gone down. So our rule is done. All I have to do is just copy paste this right till the bottom. So I've copied the formula right till the bottom for next 28 years. We started with 1 lakh, and if you notice, after 28 years, the value is actually 10,000 only. The value is only 10,724. That means that stock has actually gone down. The stock has actually gone down. Let's actually see how the stock value behaved over the last 28 years. So if I just show you the charts, this is how the chart looks like. So we started with 1 lakh rupees, and if we were doing this strategy on Nifty intraday, our money would have actually gone down. Our money would have actually gone down. That means over the last 28 years, the intraday, the value of Nifty has actually gone down. The value of Nifty has actually gone down. So we can even check that. So to see if we do the closing price minus the buying price, and if we do it for the whole 28 years, you will notice, so let me just sum this up, that on an intraday basis, we actually see a downfall in Nifty. What I'm going to do is, let's now do the BTST strategy. So I'm just going to copy it. So I'm making another sheet here. Let's call it positional or BTST. And let me just remove all the extra columns that we had created. And now what our rules are, we will buy at the closing price. So whatever is the closing price, I will buy at that price, and I will sell at the next day open price. So for that, since we will be requiring the previous close, so let me just make another column called previous close. When I'm finding the previous close here, and like last time, we are starting with 1 lakh rupees. So the number of stocks that I will be able to buy will be based on the previous close. So that means all I have to do is 1 lakh is equal to 1 lakh divide by this previous close. So I will have around 100 stocks, exactly 100 stocks. And today morning, so this is previous close, so today morning the price is 101.53. So my new value, my final value now is 100 multiplied by 1001.53, and you can see I made a profit, a small profit. Again, the next day my value is this divided by the previous close, and again I will be multiplying the number of stocks with the opening price, and it has gone down a little bit because the market opened lower. So again, let's just copy paste it right for last 28 years and see what the value is. And you will notice now that this strategy has made exceptional returns. From 1 lakh rupees, our portfolio value has increased to 1 crore 65 lakhs. So from 1 lakh, it has gone to 1.65 crore. That means 165 times. So this strategy gives, the normal BTST strategy on Nifty gives you 165 times the returns in almost 28 years. Let's see the cumulative curve also. I'm just going to add the curve now, and this is how the curve looks like. And you can see, since we are also compounding the money, you can see that really picks up, and it has given us great returns. You might feel that initially the money is not coming that much. That's because of the compounding. Because in this strategy we are compounding the money, that is why all the compounding strategies you will get a great return right in the end. This is what Mr. Warren Buffett has also done, right? So this is how the strategy looks like. We have been able to, simple BTST strategy on Nifty would have given us 165 times our corpus. You can test the same strategy out on different stocks to get an idea, since you already have the formulas now. So I hope you like the video. Do subscribe to the channel, and I'll see you next time. Thank you.